Hey folks, Bruce Winder here, retail analyst. I hope all is well. I thought I'd do a little video today to support my Substack and LinkedIn on Home Depot. So I took a look at Home Depot's Q1 2026 results and listened to the earnings call. And overall, I mean, on the top line, it was a pretty good quarter. Sales were up 4.8%. A lot of that is driven by new stores, though, and online probably. Comps were up 0.6%, which is fairly flat. Operating margin rate was down about 100 basis points. And earnings per share was down a little bit too, came in at 330 versus 345 last year. So Home Depot's in a bit of a very tough market, right, in the U.S. and around the world, as the housing market is distressed right now, and they're really focusing on their pro business. That's really where they're seeing some gains. I remember hearing that the pro business was up more than the DIY business, right? So that's where they're seeing some growth, and that's where they're focusing. So. Um, yeah, basically, it was a an okay quarter. It was okay in terms of top line. Like I said, a little bit tough. On the management commentary, they talked about Minkledorf. So they acquired a new company, a distributor of HVAC. And they've been on a bit of a streak doing that. They bought a few other sort of pro distributors recently. So they talked about that quite a bit and how that gives them more scale. Talked about store operations, reassignment of tasks to merchants, merchandising teams, so that folks can look after customers more. Faster delivery. Every retailer is talking about faster delivery these days. They also launched some pro tools to help the pro consumer. And in the merchandising, they talked about pro customer. They talked about digital as well. They talked about their spring Black Friday and spring gift center events. Ramboard exclusivity. They have a new brand coming that's exclusive to them within their channel. If you look at the share price, um, the stock closed at about $300 on May 18th, the day before the earnings were released on the 19th. And it went up a little bit to 301.36, so just marginally. At the time of writing this report on May 25th, the stock was down about 8.8% over the last 30 days, down about 13.7% over the last year. And on a 5 year basis, pretty much flat, down 0.86%. So I hope you enjoy the Substack, and we'll talk to you soon.